Welcome everyone to the Kendall Report. Good morning. What an opening, huh? Couple of little downticks in CPI and the world's changed just like that. Pretty amazing, folks. Welcome. Good morning. Make sure you hit the like button and subscribe. Let's get right into it today. There's a ton going on with the markets right now. We're looking at the S&P up 345, up 129, 38.85. I know all those bears out there are not feeling very good this morning. And as I've been talking about for a while here, we're really in a consolidation range, and that's what's driving the markets. I'm going to change up just a little bit to get some things going this morning from standpoint. I had a really good suggestion from one of you out there. Sorry, I don't remember your name, but you said, why don't you do all the market grid stuff before the opening so we don't have to be looking at that when the markets are trading. I think it's an excellent idea, and I'm going to do just that, and then we'll come back in, talk about crazy action in the treasuries, printing 3.93. I talked about the extreme on the downside being 3.92. Well, we're there like in a heartbeat. And it's really interesting. You can see the chart over on the bottom right. You can see gaps in the 5-minute chart. Crazy action, to say the least. Yeah, so let's go ahead, and I'm going to go off screen. Let's bring up the market grid. We're just going to do market grid for daily on S&P, NASDAQ, and by the way, the market grid isn't very relevant at the moment since we've blown through RTX across the board. But let's go ahead and let's take a look at those. So we'll start off with the S&P and the E-minis here. We're looking at the high so far today, 38.87, RTX 38.41, but here's the numbers right here. My expectation was coming into this morning and planning on an S1, R2. Well, everything blew up with this number, and just a slight surprise. Imagine for a second what would happen if there was a ceasefire in the Ukraine. We'd probably be up 10, 15% in one day. It would be I think it would be crazy if something like that happened, especially if it was all legit. So let's go ahead and take a look at one of the things I did want to mention before I move off of this chart. The trade that came in on our models way back on the 24th at 37.71, been going flat, and we have these upward projections. I'll go through all these details here in a minute, but upward projections are suggesting a big move up to the 200-day moving average. So maybe that becomes real. We'll talk about that more. Let's go to the NASDAQ, get the, so hopefully you noted those numbers there. Go to NASDAQ and take a look at these numbers as well. We're blowing through everything, looking at some really crazy numbers. Maybe what we'll do here, I'm going to go through the NASDAQ, and you can see the numbers here. So make sure you get those numbers down. When you go through like this, now probably RTX is probably a support number here, 11,141, backside R3, and so forth on all of these indexes right now. So let's go ahead and we'll do RTY, and then I'll come back and we'll talk about several things before the opening here. Same scenario here, 1811. I was talking about the possibilities of getting back up to the some of these moving averages at like 1816. Well, we've already went through that. We're printing here at 1835. Fairly crazy numbers here, to say the least, up 4% on the RTY. So hopefully you got all those numbers down. Let's come back on screen here and Let's just talk about some things that are happening out there. Just a couple downticks here, and man, like I said, on this number, a huge beat to say the least. And you know, you look back on yesterday, and what was yesterday? You know, it was I think a lot of people were even liquidating, getting ahead of this number to come out today, and they just everybody's finding themselves a little flat-footed this morning. So the question is going to be, what do you do? And once we get through the open and get set up, we'll watch the first few minutes of the open and try to determine what's going to go on. I'll bring up the algos and some stuff. Today is, as somebody pointed out, we are going to go through the metals and commodities in general. But I came up with something yesterday that I will hopefully be able to get through as we go through the show. So I'm going to do the normal progression that I go through once we get the market open and watch that for a few minutes. We'll go through normal progression. Afterwards, we'll go through metals, some of the primary metals, copper, silver, gold, to those to start with. And, you know, then I'm actually going to just touch on, because of this inflation story and what's happening, I'm going to go through some of the grains as well. And I'm going to be expanding quite a bit as we go forward. The other thing I'm going to do after this we'll call it the around mid-session here today, is I started to run some of the algorithms on CPI and unemployment rate, all this stuff. And it's very interesting, because I was looking at them last night. I kind of missed doing the nightly videos, but because I would have covered this last night. And one of the things that was coming out of this is that CPI indexes, the algos are suggesting they're going to just plummet here. So maybe we're going to shift from inflation to deflation. And there's a whole bunch of noise. If you notice right now, just about 5 or 6 of the Fed talking heads, presidents of different federal banks, Federal Reserve banks, are all out there talking. And they're talking about inflation going down, and they're talking 23, 24. They're talking about all these things. They're just blowing up the algos right now. And so they know exactly what they're doing. This is scripted type stuff. Said, okay, they knew this number last week, okay? So they are literally had this thing all geared up. And right after the CPI, they just got a slew of these people coming out. And I was going to bring up here just a little bit. I know on our Discord, we've got a news feed that's coming in, but it's just one after another is coming up here, and including the ECB. Although the ECB is telling you something completely different. This is crazy talk here. What time are we getting get on? Yeah, we got another minute and a half or so. Crazy talk. They're the opposite. They're telling you inflation not at its peak. Pipeline pressures are significant. We're going to have a huge recession. It's not going to be weak. It's going to be a strong recession. You come across over here on the other side of the pond, and you're hearing the exact opposite. You know, the most likely we're going to have a recession. It'll be moderate. We think inflation's peaked. Amazing, folks. I mean, if you look at the contrast of what's going on. So what is the goal here by these banks? What are they really trying to do? Interesting world we live in, folks. You know, the rhetoric that we have to try to sift through. And I think one of the beauties of being, for myself, being a technician, quant, that it just takes all this noise out. You know, we have to talk about it because it's interesting. Because I guess what I would argue is our models were already positioned long. We saw our database move up on a short-term basis up to 50% bullish. And so there's a lot of traction that we've seen on a short term. Does it mean something for the intermediate? And that's what I'll be talking about a little bit later as well when we go through the database, because that's going to be helpful to understand, at least from the shifts in my technical views and my quantitative views of what's going on in the world, especially if we start to see some intermediate type action here. And then maybe the whole seasonal and everything that goes on, we're almost about at the open side, that goes on and talking about them, all of the mid-cycle elections and all that stuff. All of a sudden, all these things get satisfied. So let's get ready for the opening bell. I'm going to go over to another screen here, and we'll be on level 2, and let's go ahead and check this out. All right, we should be getting a bell any second here. Trading at the highs of the session, really pretty amazing. And we're off. So we've got the markets trading at the high. Like I always try to point out, watch this this volume over here on the far right. It's going to be hard to beat because we had this spike on this big move up here. This is a 5-minute bar. This is an interesting pattern. Those of you who've been in the live room, so pay attention here. We just printed 97. Are we going to print the 9 handle here? Well, let's see here. But what's happening is there's a potential what we call a veil top setting up here on the 5-minute. We're still printing through the highs here. Here's 99.50. They got to do 9 even, right? They got to print 3,900. 3906 is still a number out there to watch. That was the highs, I believe. 0306 level is right where they're at. The key resistance numbers. So we printed 99.50. Are you kidding me? We're not going to get that. But it's so funny. Usually we get these big spikes in volume. We're seeing a little bit over here on the 1 minute, but the 5 minutes just can't even compete what happened with this CPI. This is pretty crazy. So we printed, here we are, 94. So we're getting some profit taking and selling. This is what this pattern is telling us, by the way, and we'll go over through the algos just in a couple of minutes and start to see exactly what's setting up here. But I suspect at least a lot of this big spike in momentum that happened off of this move up. I mean, we were, I think, 94 or 95 handles higher, like, one snap. And then you saw the 10-year just plummet. It was just amazing how the turnaround that happened there. I mean, it wasn't even a turnaround, just this huge bid showed up, and it was complete air pocket. If you went to a tick chart, you would just see gaps all the way up. It was pretty phenomenal. So yeah, we're actually printing through STX on a 5-minute here on this chart here, and we're seeing this a pretty dramatic type pattern. So like I said, this is this veil that sets up. We're going to find out, and the key areas that you're going to want to watch is around 37. I'll get this right. I'm so used to being 37 handle yesterday. 38.80, 38.84 down to around 38.75 is going to be where you're going to watch this market. If you're a day trader, you're going to see some support around those levels, and that will also ultimately probably set the breakdown pattern here from that level. But yeah, just looking at, like I said, every one of these folks are out there. So yeah, ECB's Cosmer, I'm not sure, Cosmer, I think it is, quickly becoming, fiscal policy is becoming a inflationary risk. So now they're just trying to pull all the fiscal stuff back, everything. So here we are trading 86. This is the level I was just talking about. We'll stay here for just a minute, folks, and see exactly what's likely set up. So this is the range right here, 84, 86, right in this range here is going to be, the next level is 74. I think we'll probably see a potential for this top. There's a really interesting pattern. I'll try to come back here by the end of the our next hour here, and we'll talk a little bit about exactly what this pattern could end up to be, this veil top. But it's there's a lot happening here, maybe a little too much too fast, and market's going to have to digest all this stuff. But here we are right at 84. Let's see how that, let's just hang here for a minute. What we got here, about 4 minutes in. Let's just hang here and watch this 82 prints. And what we're, like I said, looking at right in this area here, we should get some kind of support, maybe a rebound back around 92 handle. But here we are, 81s. They're still printing them down. Let's go ahead and dig into the algos here just to see what kind of action that we're getting there. We're going to start here with the this is a 1 minute chart, so you can see the big blow up here. Algos are still suggesting we're going to be trading right into these 40 period moving average right now, 82. That's right where I was talking about there. Let's go to a 5 minute. We're going to go through the spectrum here just to get the S&P set up. But all you're seeing here on the indicators, on the PPMs, is what they're going to do is they have to correct. You see this bubble here. It takes about between 10 and 15 bars for you to normalize these indicators again. And it looks like about 8-10 bars out, this is a 5 minute. So we're looking at, by the time we get to the end of this hour, we should start to stabilize and see the market trying to maybe do a retest of the higher. We'll see what actually happens here. So far, we're printing 78s here, so they're still pressing this thing into this at the moment. So let's see if we can get any kind of feel here going to the next level. Let's go to the hourly. It's going to be really tough, folks, with this blowing up like this to get a handle on it. It does look like we're probably going to spend a couple hours in here, and about the best that I can come up with is that 70 handle. When I go through the normal cycle here in a minute of going through the S&P and all of that, we'll try to determine where the support levels are going to be. These are tough days that when you come into this, you have to start to look out, and I'll bring up a weekly chart here in a few minutes, just so we probably should look at the weekly market grid just to see if there's anything there that stands out. Like I said, 3906, 390306 is still big numbers in the pattern, and we're probably just going to see some insane volatility here today. And who knows? We still have all these Senate races, and everything's still up in the air. So it looks like we have another December. It looks like Georgia, once again, on a runoff, is going to make a big decision about the Senate anyway. So that's going to keep us in limbo for a month. This is good. It's going to be fun, right? Okay, so let's go ahead and I'm just looking at some of my notes that I thought I was going to talk about this morning. Just real quick. We've got 415 earnings coming up, nothing significant that I could see. Pharma, banks, core economy stuff again. And there's really, I don't think anyone's going to be worrying about any of these things today. The algos are set. And like I said, all of these Federal Reserve presidents are out. They're all on, it's like a book circuit. They're all talking about it. And they're talking about 23 and 24. They had no clue a year ago, folks, that rates would be at 4%. And now they're going to tell us about 23 and 24. What a joke. Okay, let's get into a little bit more. The algos are just telling us that even though this is what has to happen when you get a blast off like this, as all of the moving averages right now, because of this sharp drop, jump from where they were, it's going to take at least the next 5, 6, 7 hours for these charts to normalize. These things are almost worthless. at the moment as far as determining anything. All the PPMs and the algos are telling us is that the actual percent change in the moving average is going to slow down, but it's still going to be very robust. So it's going to take hours and hours to stay above that. So the only way you're going to figure out anything is to go back to these 5-minute charts. And I'm going to flash back for a second back over to this chart, because this is where here we are at 78. This is approximately, we're getting that little veil top. I got my cursor right here just showing you. What happens is these regression lines start to form some serious resistance. What I'm going to be looking for is if they get into what I call a twist tie, where they all converge over here around this between 70 and 80 level, and then they can start another round up. I'm not sure what would be able to drive this, but we are seeing some stability here around this 78 to 80 level. So let's go ahead and let's start to go through the normal cycle here. Let's take a look at the Wavetech database here real quick. So we had an interesting rotation, a little negative after yesterday's down, but 1,245 sell signals on the open this morning, 388 buys. We're still at 48.49% bullish. So this is still remaining. I'll be with you tomorrow. So I'm usually on Thursdays, on Thursday night, I would cover my expectations for the database on the intermediate. If these prices hold here today, folks, if they hold and we close higher and we can maintain this into Friday's close, we're probably going to see some decent traction on the intermediates. I'll cover that tomorrow when we have more information on that. Bear with me one second. So we'll take a look at the S&P. We already covered the market grid. So interesting, as I've been talking about, we had this STX buy and sell. When we get 5 in a row without an opposing RTX sell, those are usually really good lows. That was bringing us right into this lower pattern here. So as I've been talking about, the algos are still suggesting here on a daily that we're going to start to improve a bit again. And more importantly, I think on PPM3 down at the bottom, that is very significant. I'm going to add a indicator on here. These are the Wavetech indicators. I'm going to put the Wavetech 200 on the bottom here. And this is one of the key elements, because this is the 200-day moving average. As I always talk about, is folks don't ask the right questions when they're using moving averages. Why is it going to be a valid trend line, or when is it going to be broken? I spent my entire career understanding this, and what all this stuff is telling us is that right now we're going to see trend mode continue on. The key level is going to be 3780. It was 3760. We kind of printed just below it, and here we are, at the high 38s again. But this pattern is continued. As I showed you on the pre-opening comments, we still have that 3771 long that came in on our models back on, I believe it was the 24th of October. So that trade's still on. And one of the things I think we could see here is a ramp up toward the 200-day moving average. I'm going to add another indicator on here, and I'm going to do our fib projection, because I want you to see this. These are the projections here, 4130, 4292, and basically 4400. I think this 200 is still downsloping. That's going to become a target whether we can get to this pattern or not. I'm going to draw something in, and this is going to be relevant to most of these charts as we go forward here. And what I want to show you is this is what's being picked up by our algos. It's seeing this pattern here, and it's projecting up to these 3 levels here. And so the most likely is right here. Also coincides with the 200-day moving average. And that number right now, that's 40.44, and Fib target 1 is 41.30. So it's about a 100-point range. I'll be able to fine tune that as we go forward. But those are the numbers that are showing up here. I just talked about bringing up the weekly market grid here, and yeah, this is even more bizarre here, folks. I hate to get too bullish today, but these numbers guide me. I've been talking about this for a couple of weeks now when we were down in these lows, that the algos on the weekly were suggesting we're going to see more upside. Here we are, right into December. The beginning of December, we should see another few weeks of upside right before what? The last and final Fed meeting of the year. So what we're seeing here is new objectives. 41.90 is Fib target 1. So, I love these clustered numbers. So we're looking at clustered numbers between 4,040 and 41.30, 41.90. There's a bunch of stuff. I'll fine tune that. But it looks like at least we're potentially going to rally up there. Tomorrow I'm going to go into much more longer term aspects of the markets, and we'll close down a week and review tomorrow will be basically a review of the week and looking forward to next week. So we set it up. I used to do a lot of that on Sunday night. We're going to do it here on Friday at the end of the show. All right, let's just stay with on the NASDAQ here. Let's just stay here. Similar type. These are brand new as of this week projections on the upside. And once again, the 40-period moving average is coming in at 12,636, and these numbers are maybe likely to be hit. It looks like we only have PPM. This is a big issue here on PPM2. This is weekly NASDAQ that we're looking at, is only suggesting that this could be a period of where we consolidate here. The NASDAQ still has some crosswinds, we'll call it headwinds coming in here, where it's going to be a little harder to get up to these levels. But there's so much, negative and short interest in a lot of these and options and everything that we're probably going to see at least it getting back towards some of these other numbers here. Maybe back toward the 12,000 level is certainly likely here. Whether we get to 12.6 or not, that's a tall order. We'll see how that all sets up. Let's go back to the daily. And a daily has a little tighter. These are new objectives that were issued today. And this is for 11,885, 12,362, and 12,6. So that same number, everything points to the 200-day moving average. I have a feeling that the NASDAQ's going to fall short. I think there's a big, as I've talked to you folks this week about, there's a big restructuring of what's going on as far as the cash flow in the markets. And I think ultimately there's going to be more of a flow toward the mid and small cap stocks as we go forward here. But we're still looking at the algos suggesting that we're going to see a few more days in the upside. And the new targets right now, as I mentioned, 11,885 is the min. All right, next we'll bring up the Russell. Russell's getting interesting again. Look at the new objectives here. I mentioned these yesterday. 1990, 2079, 2134. These are the numbers that we're looking at on the upside. Those are big numbers. Algos are suggesting really not any real big move on the upside, but what we are getting into is trend mode up, and we're going to need to get above the 1817 level and stay there. We're trading 42, so we need to, that's going to be your support that you're going to watch right here at 1817 on the Russell on the daily. We need to stay above that number over the next several days to keep this momentum starting to grow. We'll see what type of action we can get out of this from this standpoint. All right, now for the fun stuff. See if I can get this scaling so we can see it. Matter of fact, we're going to go over to TradeStation for this. Just a lot cleaner. Massive move on the downside on these yields. We're looking at the 387 print low with a 387.1. We're printing the lows of the session on this, and what we're seeing here is a complete breakdown. You're seeing the PPM starting to accelerate down. There's actually fib targets on this market right now at low target 1 is, let me get to the right place, 380, low target 1, 364, and 354. Those are pretty crazy numbers. I'm going to flip this over to a weekly chart, though, because I think I've been talking about this for a while on from the standpoint of what's going on here. Let me just bring this down. I've been talking about, I think we're going to stay within this grid. Really didn't think we could get to these numbers here, folks. Let me bring this up for you. Is that we get the 10-period moving average 384.20. We're trading 387.10. That's crazy. I did not see that happening. Although if we look at the market grid, 3.87 is S3. That's exactly where we just printed. This should be about the extreme. And as I've been talking about, I'm just going to draw this in really quick just so you make sure that we're all on the same page here. But I think this is what we're going to do. We're going to be boxed in these yields. This pattern that's right here, this 10-period moving average that's coming up is going to be support. Like I said, that's around 310 right now, 3.10. I got this right. I'm not on the right cursor, so I'll update that in a second. But this is where I think where we stay here, where we just literally get some kind of box formation here, and we stay in this area here. Let me get the actual number for that moving average I was just mentioning. That number is actually at 384.20, and we're looking at a 1.82 ppm1, which suggests that there's only a 30% probability for the market to close below that number, which is, again, 3.84. So we're trading 3.87 right now. So this is about the extreme. I thought we could print 92. If you look at the, this is a weekly 10-year. This is really the extreme of what's likely for the moment. What could happen if we stay down here into tomorrow's close, this is a weekly chart, we could see market grid turn down and start to get some values. And we're already seeing the first derivative be punched out. If we get the second derivative to be taken out here on the PPM1, what that's going to suggest is that we're going to see it break the 10 and even go down further. I mean, this is kind of an interesting conversation to have, right? I've been talking about, I thought that we would do 392 would be extreme, 424 on the upside. Right now we had 421 high, and we printed below this 92 level. Let's go over to back over to the algos though, and let's go to the weekly and just see what kind of predictions. Look at this. It's showing that the PPM 1 is going to be going into trend mode down, a substantial trend mode down, which means that the market is going to have to trade below the 10, which is 384 I just mentioned. So it means we're likely to come start to trade below 384. If we do that, that's going to tell us something even more substantial. And I'll just come up here real quick because this is an important subject to talk about, is if these patterns are going to start to unfold, then this inflation story that maybe started today is going to become more significant. And if that happens, then what we're likely to see is really an acceleration of thought as far as equities maybe bottoming. I still think there's going to be a tough rotation. I think the NASDAQ may underperform. And just while I'm on this subject here, I know we're on this, I just want to, I think this interest rate is exactly what's driving a lot of this. We know that the higher interest rates have been advertised not good for the tech sector. The tech sector is really seeing a major shift. You know, we saw, just to kind of tie all this stuff together, we saw something really interesting. We saw basically a bubble in assets. The FANGs and these tech assets just got way overplayed for not for a year or two, for like 10 years. So this is what I've been discussing with you folks as we've been going through everything this week, is really what we're seeing is a shift in the markets to a different segment. We've seen this before, and I think what we're seeing is a shift. Not that the tech stocks there won't be opportunities there, but the bigger opportunities are probably going to be in the small and mid cap areas. And so maybe for those of you institutional clients, if you're doing a value growth type situation, maybe doing a all cap to a small, mid, large cap, and just have them weighted that way, and so that you can participate in you'll get a double weighting by doing, even if you didn't use our software and you just basically allocated out a third, and a third, you're going to end up being biased to the small and mid. You're going to have 60% of your money there. That's a good ratio. Bonds, obviously, maybe 60-40, you'll feel good here for a little bit. But for the most part, what I'm talking about here is a huge shift. A lot of it has to do with the interest rates. Does this become material? It's hard to say. Even with the declines that are estimated, what we're seeing is that ultimately, I'm back to the 10-year now. I know I'm on a little rant here, but all this stuff is connected. So we look at the 10-year. The 10-year is actually where the key values are going to be, is down closer. I'm going to say this out loud. Down closer to 355 on the 10-year. And that would be, if that were to happen, that would realign a whole lot of stuff in the markets. And all of a sudden, we're coming to the Fed meeting. My expectations is that just about everybody that works for a mutual fund or anybody that comes on CNBC is going to say, well, we still need to see what the Fed does on the next meeting. They're still going to do that. We'll see how market sentiment plays out from here. Sorry to get on a little bit of a rant here, but I think these are important things to understand. And when we're looking at the configuration, the larger configuration of the markets and what's likely to play, a lot of times when I do these shows, by the way, this is real-time analysis. This is not pre-thought analysis. So that's why some of these rants come out. A good friend of mine pointed out the other day, rants equal passion. I love that. I love that statement. So you guys can use that. I'll give that one to you. It was given to me, so off you go. But all of these things are very highly related, especially when it comes to the interest rate markets and how they're going to affect different asset classes as we go forward. Because everything is going to change here. We've got maybe we'll call it a neutralized government. We're not going to be able to do some of the things that they were doing in the past. They're not going to pass $1.7 trillion budget, all those kind of new stimulus. None of that's probably going to happen. There's still a ton of stimulus out there, folks. Even though we got QT, what a confusing environment. We got QT, got rates going up. We still have stimulus out there. The jobs market continues to be strong. And you try to put that story together and decide what to buy. I'm telling you what I'm seeing with a lot of years of watching these markets and watching the flow of these markets. I'm seeing this shift that I'm talking to you about. So let's see, where are we? Let's go on. Let's hit crude oil. Not going to cover gold right now because I'll do crude oil, Bitcoin, and then we'll go into, let's see where we are. Perfect timing. We'll go into the second part of the show today, and I'm going to go through some other things. I'll set that up. So let's go ahead and do crude oil, Bitcoin, and then we're going to do a special segment today on looking at metals and expectations there, and we'll move on from there. So let's go ahead and take a look at crude oil. Bear with me just 1 second, getting some scaling issues together. Okay, unable to get TradingView. That's one of the biggest issues with TradingView that I see is scaling, especially if you have a lot of long-term indicators on. Anyway, let's go ahead and let me get you over to the crude here. This is, we'll start here. This is as good a place as any. Crude weekly. We are seeing crude oil stabilize. We had a pretty ugly day yesterday. Markets moved down on a weekly basis. 84.70 was a low. 85.75 is STX. So we're jumping back to above the STX level, and the crude is just really sitting here with this is, like I said, the weekly. This pattern is still sitting right on the 10-period moving average, 85.32. And PPMs are completely flat. So it's vulnerable to the downside, and it's possible what we're seeing here is some other things going on. I'm going to attempt to go back because I really want to run the algos on here. So bear with me just a second here, and hopefully I'll be able to get this scaling so it's visible. Okay, so here's the weekly. What's being forecasted here from the algos right now are suggesting that we're going to see continued overhead resistance here. Change the scaling just a touch more, just so you can see the most recent. You can see this downward slope of the 10-period moving average. I'm sorry, the 21. The 10 is flattening out, and it's suggesting that we're going to stay still move lower. So there's a pretty good probability that we're going to trade below 85, maybe go down to my lower expectations that I've been talking about at 82. And there's not really any numbers below that, but let's go over to a daily here and just get what the daily suggesting is that we will stabilize somewhere between 85, 82 and start to see, let me broaden the scale just a little bit so you can see this. There are some cross currents in here, but really it's a consolidation. And I just want to draw this in because crude is also an important component here on what's going on, especially with in the inflation and those type of things. But really what this pattern I think is doing is just kind of a zigzag. I'm guessing that we're going to stay under this 200 and we're going to end up in some kind of channel like this. And there's no reason for it to decline substantially unless they blow up. They finally end up blowing up the employment situation and everything rolls over. I don't see that as a possibility. That would be pretty devastating from the standpoint of the economy and everything. I think that zigzag formation is exactly what is probably going to occur here when we're looking at crude oil. All right, let's do Bitcoin. Crazy market there as well. This is the daily chart here. Daily was interesting. The forecast, I think I mentioned this yesterday, on a weekly basis, it was about 4 weeks ago, I was talking to you, this thing is forecasting an absolute collapse in prices. We got that. What's happening now is it's suggesting we're going to rebound back in here. We're looking at right now a 17,748, and the low is 15,760 on, this is Bitfinex that I'm looking at here. And it looks like everything wants to stabilize. Let's go over to the weekly because that's where the really ugly pattern was being forecasted here. And it's moderated just a little bit, but it is still suggesting that all of these moving averages are going to continue to come down. And we're looking at resistance right now, substantial resistance at 19,664. That number is going to be coming down substantially, and it looks like all of this moving averages will continue. Let me broaden this just a little better so you can see this most recent formation. As we just broke through anything of the market grid, I had talked about when you get a market grid that starts to narrow substantially, volatility drops. This is typically when you're going to get a major price change, and we had that happen. And the algos had been predicting this decline for a number of weeks. And it's interesting from that it's actually materialized down to 15,000 is a pretty big number. We were trading as high as 21 over the last several weeks. So this is a big number. Okay, folks, I'll come back up on screen here for a minute. What I'm going to do is I'm going to get set up. I have a list of things, and let's see what time we're getting. Yeah, time's flying. We're having way too much fun. But the one of the things I want to cover here is, I'm not sure. Maybe I'm going to do this tomorrow, but I would just make some comments on it before we'll go into. We're going to have to get into these metals and some other stuff I want to do, or I'm going to run out of time. So my rant kind of blew that up, but that's okay. I needed to say that. So let's talk a little bit about, and I'll do this tomorrow. I'm just making a note for myself for tomorrow. And I ran something interesting. I mentioned it on the pre-market comments and earlier in the show. Is that I ran the core CPI, the index on CPI. I read Fed funds, and I ran PPI, both core and index. And it's very interesting because I ran the algos on there and their monthly charts, and that it was pretty amazing what it's suggesting. And in fact, it was suggesting, like I said, if I'd been doing my nightly show, I would have brought this up last night. It was suggesting that CPI is going to roll over substantially. And wow, can you imagine if the Fed got that right? But the point is, I'll do that tomorrow. Tomorrow, I'm going to focus on the end of the week, summary in the second half and all that. So let's just get into these metals and start to take a look at some of these patterns out there. So I'm going to do a combination going between TradeStation and TradingView just for the algos on TradingView. But let's go ahead and dig into the metals, and ultimately I'm going to cover on even the grains, because I'm going to summarize this at the end of what I think is going on in a lot of areas. And I did throw in there as well as in when we get into the grains, I'm going to do after the metals, I'm going to do lumber as well. So let's get into that. So let's start here with gold. Gold is loving this thing, up 33. We're busting through. This is the weekly chart that I have up here. This is huge. Been talking about, I'm going to show you the algos in a minute, but the algos have been predicting that we're going to see this big weekly move. And here it is. We're all the way back toward the 200-week moving average. That right now at the moment is at 1760. We're printing 46. I thought we would have some resistance around 1725. That was non-existent with this news today. So here we are up 2% on gold. So maybe that scenario and the lower rates and all that is what was being picked up by the gold algos. Okay, that's kind of that's kind of how's the best way to put it? Just maybe the unexpected was coming out of those algos. Now it all makes sense. Hindsight sometimes is 20/20, like always, and that's an interesting thing. But we're coming up into some pretty substantial resistance. But look at the PPMs across the board; they're all turning up simultaneously. Those of you that have the PPMs and have the indicators, just know when you see all of them go like this at the same time, that's the most bullish signal you get. And this is on a weekly basis. So this is going to suggest that we're going to have, a multi-week event start to happen. Let's go over here and let's bring up gold here on, and just bring up the algos here. You can see this is what I was talking about. This is the same weekly chart, 10-period moving average. The PPM1 is being forecasted to get into serious trend mode, which probably suggests we're going to head for 1800. That's not even a big deal. That sounded like I was saying something a couple of weeks ago. I'm not saying anything anymore. What I'm saying is this is probably a minimum of what expected. And I'm going to switch over here to the daily algos just to pick that up. They're saying, which also makes sense, that we're getting pretty close within a couple of days here, probably tomorrow, maybe Monday, of at least a consolidation level, and it's going to end up there's a 40-week moving average just above this action around 18. I forget the number now, 1820, but 1805 is the 200 day, 1802.80 to be exact. That's going to be some resistance right there, so expect to see that happen. But the algos are saying that we're going to stay in trend mode, but we should ultimately start to set up some kind of a consolidation here from that level around these higher levels. And I'm going to put it at 1725, 1780 on that level. Okay, so let's go ahead and we're going to do silver next. I'm going to get through all this. It's 12 after the hour, so I've got to stay quick here. So silver, also this is daily silver, suggesting we're probably going to consolidate here. We already hit the 200 here on the silver. Still going to be in trend mode. So this just a simple 10 moving average. You don't have to get fancy, and these numbers will work good. Use the 10. Simple 10 as major support. Right now it's at 20.33. That's going to be your support levels. But what it is suggesting is we're going to flatten out here over the next 4 to 5 days, and that'll probably happen around this 2065, 2085 level. That'll be a point where maybe we consolidate here and get a little pullback here from that standpoint. Let's go over to the weekly. Weekly patterns, similar to gold, but not really. Still looking at, generally speaking, some pretty strong numbers here. The 10-period moving average is crossing through the 21 on a weekly. Typically, most people would look at, all the golden cross and all that stuff. Those things are pretty bogus from my viewpoint. But when I see a 10 crossing the 21 like this, typically sets up a minor top at this level. So that's where the consolidation is likely to come in. And look what's happening around where we're trading right now. We have this is weekly. We have a 40-week moving average at 21.45. We've got a 200-week moving average at 21.56. And we still have the PPM3 down here still in a negative mode. So if I were to blow this up, I'll just show you this. And this is kind of those of you who have indicators, a quick little lesson here. Will take me just a second to set this up. And what you're going to see here is let me get this is what's likely to happen. Here's this cyan line. It's still declining. That's what down here, that's what this is telling us, that it's going to stay in a trend mode down. And what's going to happen from the moving average standpoint is you're going to get the 200 over here. And then meanwhile, I don't have a white marker, but I'll show you. I'll use pink here for this. You got the 20, you have the 21 coming through here like this. So all these moving averages, what I'm trying to say here, what's going to happen with them, this area right here is just going to be really a consolidation range. We should stay above, this is weekly, above the 10-week moving average, and those things should set up in there. And where ultimately what you're likely to get from here is in here some kind of consolidation. There's some work to be done, I think, before you get any kind of breakout to the upside. And this is weekly, so we're talking about probably beginning of the year on all that stuff. All right. Stay with me here. We're going to go to, we'll go to copper next. And it's interesting what's going on. We'll stay with the weekly copper here. I'm still like, these signals have not been released to the community yet, but I've noticed on the 4 spot on the copper is really good. We got a low signal here. I don't think I have them up here. Let me turn these on real quick. And these are price projections. So let me blow this up, and so you can see on this projection right now, we do have some price projections for 707, 739, 759 in here on in this pattern here. So it looks like copper is going to have a little bit of upside as well, which, does that mean something for building? Maybe, not sure. We're going to do random lumber next. And I think all of these are suggesting, algos are suggesting we're going to get some support here in the lumber, and we're going to see some upward bias start to happen here. We just need to stay on lumber above the, let me get a number for you. Need to stay above 464 on lumber. We should see this start to improve a little bit. It's off 3% right now. This is on a weekly basis. Daily charts here. You can see the algos are turning up substantially. Probably going to test into these moving averages for we get the right numbers here, 475, 464, 475 on that level. All right, I'm going to just keep on a roll because I want to go to through some of the commodities, and that's going to set. I've got wheat up here, and this is daily. Let me go weekly here. Let me rescale this. It's interesting because I'll leave this up for a second. There's a fib target down to 1058, which is an interesting number, but let's blow the scale up. I'm not sure that's very valid, but we are seeing PPM starting to roll over. But if we look at the weekly and going back to 2020 and all the food and everything. So here's my point, folks. My point is that what I'm going to show you here, we're going to go through the grains. They're all showing that they're stabilizing at a higher level. And this goes to some comments I made the other day, is that the Fed's got targets of inflation at 2%, but just about everything you see, there's a stabilization and support at much higher levels from where we started. And this chart here goes back to 2019 that's on the scale here. And you can see a little better picture here. But these are things that are likely to continue. So I'm just going to go through here. We're going to take a quick look at, I believe it's anyway, these are soybean oil futures. I just want soybeans. I thought I had the symbols here, but this is good enough, just showing the trend. Like I said, all of these foods and everything are going to be much higher, and maybe they go down, but even if you get down to the weekly moving averages, let's go over to, I even have oats out here, just to take a look, but you'll see that the grains are all starting to stabilize, but they're stabilizing. If we go, let's see if I can go to a monthly chart, see what kind of data we have here. So you can see this is the lows where my cursor is right now. Back in 2016, we were really just stable all the way to 2020. There was no big dip there. Then there was this big surge in prices. So basically, we're trying to stabilize, but we're stabilizing slightly above this. So see where we are, 21. I've got about 8 minutes. So what I'm going to do here is I'll come back on screen and just kind of summarize on what I'm seeing here at the moment. So what's happening across the board on CPI? I will show you tomorrow the Augos on CPI. I'm hoping to have like a whole economic overview tomorrow, and we'll talk about what happened this week. We'll see how everything settles in and all that. Since I was talking and not focused on the markets here, we're looking at 39.12 on E-minis. So I know exactly what happened. So let me just summarize this. We'll take a quick glance at the final shot at the markets, and we'll call it quits for today. And I'll see you tomorrow night. Those of you in the live room, I'll see you at 1 p.m. today. But the pattern, everything that's setting up here, ultimately is inflation is probably going to top out. But the real question is, where does it bottom out? And is it going to be 2%? You remember for years when we had inflation rates at 1, slightly over 1, and it just, the Fed kept talking about, well, our target's 2, our target's 2. Well, we never really got to 2. We went from 1 to 10. Now they're going, well, our target's 2, our target's 2. So even we get one of two things that happen. They blow up the entire market, all this stuff through the QT, and we have to really wash out the system, and we go into massive deflation, or we maintain a higher level of inflation. And I'm going to go with the latter, is that we're going to end up with inflation levels that are elevated from what they were in 2016, 18, 19. Everything's measured pre-pandemic now. And we're going to stay well above that level, whether it's 4%, 5%, who knows? And I suspect that as crazy as the world is, that we're going to have spikes, and the spikes aren't going to be down. I would be very, very shocked that that would happen. I made some wise guy comment when we started this morning. If you just joined in, I made this comment that, can you imagine if we get right now a 4% move in the S&P, a 5.3% move in the Russell, and then we get the NASDAQ up 5.6. What do you guys think? Comment in the line here. What do you think if there was a true ceasefire or some kind of real peace agreement in the Ukraine? But what that would mean? What do you think? What do you think that would mean? Like I said earlier, maybe we'd be up 15% now. Who knows? It would be a crazy number. I don't know that that's going to happen. I do know that there's some talk, and I know they have a really, really cold winter on the way. They always have a cold winter, and it's cold there. That's all there is to it. It's just cold. And so who knows what's going to happen. I think a lot of infrastructure has been destroyed in Ukraine. A lot of supposedly injured. I'm sure there are. I don't know the numbers of even if they're accurate, but a lot of casualties on both sides. So what's the real cost? At some stage, it will end. And if that happens, and depending on how it happens, that could be another major event here. It's just interesting that we're getting this stuff. And like I said, tomorrow, I'm going to go into more in-depth, larger macro view of what's going on. I've said it before. I'll go through it tomorrow and show you. But there still is a secular bull market going on. And all we're really doing is working a channel now. And it's interesting because there's a lot of folks that still think the end of the world's coming. It doesn't look like, not today, we'll say. Okay, doesn't look like it. And when you see these stampedes of money and cash flow come in like this, those aren't scared people. Let's face it, a lot of people trade very actively, and that's fine. A lot of this is traders. They're willing to come in and step in, and there's also folks that are got a little FOMO. They're going to be driven by other types of emotions. So anyway, folks, just looking here. I'm just looking at a couple comments here. Somebody said wanted to know about our products and what it can do for a smaller investor. And I'm going to probably next Wednesday, we're going to be doing a product feature. Wednesdays are going to be my day where I even have a potential. I'm working on getting some guests to come in. I'm also featuring different elements and things. We talked about, some of the aspects of the markets on a macro view. Sometimes I'm going to fill this new schedule up with a lot of different things. So you're going to want to watch every day. You're going to want to hit that like button. Let's get this going. This is a new channel. I think we actually had received emails from people wondering how to get to my new daily livecast. It's just on YouTube. So if tell your friends, so that we can get this viewership up and really crank it up, because I want this to be successful. And as we go through, like I said, I'm going to be crafting this show to serve you folks out there and to give you the best information. Thank you for whoever, again, I meant to write down your name, whoever came up with the idea of doing the market grid pre-market. That was an awesome idea. Give me some more ideas, what you'd like to hear, see, all that kind of stuff. This show is for our customers and it's for the folks on this channel. So the best thing you can do is tell me what you want to hear. and that'll make it. I tell everybody in the live room all the time, ask questions, because one of those questions could bring up a lot of wisdom or some crazy rant that there'll be some really good stuff come out of. So a lot of stuff here. I got 43 years of experience locked up in the head here. So we want to get it out here on the channel. So thanks everybody for watching. I will see you tomorrow, same time. Have a good day trading. Good luck here. It's going to be pretty crazy. See you folks in the live room in a couple hours, 2.5 hours. See you then. Have a great day trading, everyone.